So our topic is mergers and acquisitions, and we're going to talk about one of the most exciting industries for mergers and acquisitions that is attracting a lot of interest from outside investors, but also that sees a lot of movement inside itself where players are buying other players because this is a growth industry, because uh, it's a profitable industry, there's cash to be made, and because there is a generational change that is happening that drives some of this change. But we're going to talk more about that. Jonathan, good to see you.
Good morning, everybody. Great to be here. Every day is a good day to talk about M&A.
All right, let's. Why don't you guys let me introduce our facilitators today? Although you've already met them, we have Jonathan Otis and Renato Beninatto. Many of you guys already know these guys. Jonathan Otis is our practice lead for mergers and acquisition consulting. We do a lot of work here at NIMSY Insights around consulting in this space. You don't hear about it a whole lot because the very nature of the work is pretty confidential. So Jo leads that up, and Renato works closely with him as a strategic advisor throughout that process. As always, I want to make sure to give recognition here to the big team of consultants we have here at NIMSY Insights. You see us three up here on stage today talking, but of course, all of the credit goes to our team of researchers, analysts, and consultants out there making things happen for our clients every single day. Now, we're going to treat this like a workshop because it is Workshop Wednesday today. And what that means practically is not much. We're kind of going to talk through a slides deck today that we prepared. If you haven't already checked out the slide deck, we posted it yesterday on the NIMSY Insights LinkedIn page. So go check that out. The workshop is going to be broken up into a couple different lessons, but I want you, my main takeaways for you guys here, if you're joining us today, is essentially to start off with an overview, review the language services industry, and talk about why it's so attractive to investment. We're going to learn what questions you want to ask yourself as an LSP owner or other interested party interested in getting into this space and investing, and just kind of take away some of the mystery surrounding the M&A process. We want to break it up into 5 different phases of either getting investment or selling or buying a company within the language services industry. And to do that, we're going to break it up into 2 parts, mainly, 2 main parts. First, we're going to turn it over to Renato here for a quick introduction to the language services industry for those out there who are joining us who maybe are interested in investing in the space but don't know a lot about it yet. We'll give you a quick overview, and then we're going to get into the nitty-gritty and talk about the specific phases of the M&A investment process. As with all of our live streams, this is interactive, so feel free to ask questions, leave your comments along the way, and we'll bring those up on screen, or at least try to, if the technical difficulties don't prevent us from doing so, and we'll answer your questions live on the stream. So without further ado, let's get into it. Lesson 1, a quick introduction to the language services industry. We're going to break this up into 3 short parts. I'm going to let Renato talk about what is the language services industry, why is it an industry that we like to say is impervious to crisis, and then give you guys some additional resources if you want to learn more about the industry. So, Renato, I'm going to turn it over to you.
Okay.
We wrote a book. What's in that book?
Well, you wrote the book for me, actually. We wrote this book together, and it's a book about the translation company, the general theory of the translation company, and it gives you an overview how translation companies operate. I talk to investors and people who are looking at this industry all the time, and the first questions that they ask is, isn't this an industry that is doomed to death because of machine translation? And what the basic premise of our book is that this is an industry that doesn't necessarily sell translations. What we actually provide is project management and account management to try to solve language problems that clients have. So the foundation of the language industry is that we convert content from one language to another. And I like to say content instead of text or whatever it is, because the format of that content varies significantly from generation to generation. Let's put it this way. When I started in this industry many years ago, I can actually say decades ago, we were translating words into paper using typewriters. And over the years, this has evolved, and there are so many platforms in which we deliver content today that it's hard to say that we're just translating. So sometimes the same story, the same content can be. Let's use a good example here. We can get novel. And we can have it in book format, we can have it in a movie format, and depending on the language, that movie needs to be subtitled or dubbed. The translations for movies are different for subtitling and dubbing. We can have it in a game, and there is a voice element combined with commands in the game and tricks that you need to use, and text and all kinds of formats. So translation is a service, or as we like to say, language services are everywhere where there is human activity. Why? Because it's the foundation of the language services industry is transforming content. We don't create anything. We transform content from one format to another, from one language to another. You cannot do translation unless you have something that somebody has created before, right? So we are in a transformation business. We are in a growth business. This industry, you mentioned that it's impervious to crisis. In the several years that I've been in this business, I've never seen a bad year for the industry as a whole. Of course, there are companies that go through turbulent periods. Maybe a client moves away. Maybe there is an industry that is specifically affected during a certain crisis. But in general, if we look at the industry as a whole, it never stops growing and shifting from one, because the core business that we provide is project management. Shifting from one industry to another, it's not that hard, as long as you're able to get clients. And this is a conversation that we need to have about it, right? So to summarize, this industry permeates every human activity, every economic activity, because its foundation is communication, and you need communication to grow, to operate, to exist in any business. Otherwise, you're not going to get your clients. So you need to win clients, maintain and keep those clients, and provide services to them. The second element is that it's an industry that grows at a very high rate. You see, over the years, the average growth of GDP of the economy is around, a good year is around 4.5%. And this is an industry that grows at an average of 7% per year. That's very high for an industry that is so large and affects every country in the world. We're always growing above the economy. And the third factor is that we don't create anything. We transform. It's like the old second law of Newton or something like that. I learned it as the Lavoisier law.
Second law of thermodynamics.
Thermodynamics.
Conservation of energy.
Conservation of energy. In this industry, nothing is lost, nothing is created, everything is transformed, right? So, and the final point there was that we don't see, how is it, news of the demise of this industry are highly exaggerated.
Right. You hear that every once in a while. It's like machine translation is going to replace translators, and you've been hearing that for decades. as you
Yes,
said.
and actually, the line that I like to say, and I said it yesterday to one of the big consulting companies that was doing some due diligence in this industry. I told them that machine translation replaced human translation around 2016 when Google Translate came into the market. So it's old news. Google Translate today translates more words per day than all translators in the world translate in 1 year. All human translators translate in 1 year. But the fact that it is translated doesn't mean that it has the economic value. And value is the key word here.
So I just wanted, before we moved on here, thank you, Renato, for that quick introduction to the industry. As he mentioned, we wrote a book, The General Theory of the Translation Company. If you're outsider and you'd want to get a nice, accessible overview of what this industry is all about, what LSPs do in our industry, go check it out. Some other resources for you guys out there are, of course, the NIMSY 100, which is our annual flagship report that we publish every year about the size and state of the industry. It includes a ranking of the top language services providers in there. You can find that at nimsy.com. If you're not a reader like me and you'd rather watch it on YouTube or listen to it, don't worry, we have a webinar live stream version of that you can find on our YouTube channel. And you can also check out the General Theory of the Translation Company on Multilingual Media's YouTube channel. There is a 5-hour version of the audiobook, which was made possible by Lionbridge. So thank you to Lionbridge for providing that information or providing that resource to the industry. Just to recap here before we move on to the next section, because I didn't want to spend a lot of time recapping the industry, kind of just give a teaser here. Just reiterate the points that Renato made here. This is a services-based industry. It includes a whole lot of stuff, a whole lot of buzzwords you've never heard of before. Localization, internationalization, interpreting, globalization, and all of the services that come along with that. It's a largely outsourced industry. This is why when we're talking about LSPs, language services providers, they're the backbone of our industry. Most companies do not do the translation themselves. Because of the nature of the industry, we like to say that it's an industry that's impervious to crisis, and it's a growth industry. It keeps growing. We say in bad times, we're translating lawsuits. In good times, we're translating contracts. But there's always going to be a need for translation. Now, the role of technology is evolving as the industry evolves. So there's more and more opportunities for investors to get involved from a technology perspective. And we help a lot of companies do that. Please go check out the General Theory of the Translation Company or nimsy.com for more information if you'd like to learn more. So, with that out of the way, let's move on to understanding the M&A process. And this is where we're actually going to give Jo an opportunity to talk a little bit here.
Thank you.
Because this is the meat and potatoes of what we want to talk about today. We've broken it up into largely five different phases of the M&A process, just to kind of simplify it for you. So we're going to go through the preparation phase, documentation phase, interest phase, due diligence, negotiation, and finally closing the deal. But first, before we get into that, there may be people out there joining us on the live stream or watching the recording here that are asking themselves, what do I want to do? Is this something that's interesting to me? Do I want to sell my company? Do I want to get investment for growth in my company? Do I want to buy another company here? And Jo, you talk to these people every single day. And without going into details, of course, because of NDAs, what can you tell us about this phase, this really challenging decision that people need to make?
Sure. So, I would say this is highlighted with the word strategy. Everybody has a strategy for where they want to get in life. Everyone should have a strategy on where they want their company to go. Some people realize that they've done something for many years. They want to move on and do something else. Some people are getting to retirement. They need to get their nest egg put away. They're tired of working every single day. Others realize that it might be easier to grow by buying a company with customers than finding the customers themselves. Companies might want to grow because they need some technology that they don't have. They want to have their own TMS. They want to have their own CAT tools, or business management system. So there's lots of different reasons why these transactions take place. It's one of the good things about working with a consultant like us is that we need to flesh them out. We need to talk through them. We need to understand them. They need to have the right premises and the right reactions to those premises understood. And so there's a lot of strategy that goes in. There's a lot of talking that goes in. And so we do spend a lot of time working with people on making sure that their goals and their goals are right and achievable. And that's the biggest thing. You shouldn't enter the process if it's not going to be achievable for you. So that's understanding the value that you have, what you look like financially, what you look like operationally. Is it attractive to other people? If you want to buy something, how much money do you have? How much money do you need to have? People often talk about price, but as important as price is what we call the terms. So how the money moves and how the money flows over the couple of years of a deal is very important. And so there's just lots and lots of variables, and that's why consultants are in the industry. That's where lots of people like us helping people do M&A, and it's important that people use people to help them. Just like you use doctors and lawyers and accountants, you use consultants for M&A.
And a lot of times people reach out to us and after having a few conversations decide now's not the right time.
Mm-hmm.
You know,
absolutely. And because you don't want to go down that road if it's not right. You don't want to frustrate yourselves. You don't want to spend a lot of time, with nowhere to go. And so you do spend a lot of time talking to people, and it's a mini upswing. People who know NIMSY know we do something called an upswing, which is a big. We basically take your company apart, put it back together, and help you move it forward. And when we work on the M&A side, we do what we call mini upswings. And so I'm pretty proud of that. It's a NIMSY tradition, and it works out very, very well. And I think people have really benefited from that greatly.
Renato, did you have something to add?
No, I think that I don't have anything to add. I can comment and I can say that he's absolutely right. I was an NSP owner, and in a different era of this industry where there was not so much consolidation as there is today. And I had an amazing opportunity to sell my company and learn from it. But those were different times. I was young and excited to be part of the journey of the company that bought my company. But what we see often today is that you have a generation, my generation, of translation company owners who are ready to retire and are ready to leave the company because their children are not interested in continuing with the business. Some are interested in continuing with the business, and they're very successful. A couple of them are our clients. But the whole idea behind selling or buying has to do with somebody that wants to grow in this business. Either there is a buyer that is motivated because they're attracted from outside the industry, because they're attracted to the ability to generate cash, or people from inside the industry that want to consolidate operations and bring in new clients and therefore make their business more profitable, right? So the motivations are there. You need to understand where you are in your growth journey. Is it time to exit and sell, or is it time to buy somebody else that wants to exit and sell?
Yeah. And this is what we see, and we have this slide. Once again, you can download the slides from our LinkedIn page if you get sick of me switching all over the place away from the slides and you want to follow along at home. But the process is largely the same, whether you want to sell your company or whether you want to receive outside investments from your company. And we go through these 5 phases here: the preparation and target definition, development of documentation, investor search and identification, negotiations and due diligence, and of course, finally, closing. And for the rest of this time here today, I just wanted to take us through this and talk a little bit more in depth about each one. as we go through this together. So let's start with preparation and target definition. What happens during this phase? Jo, walk us through a practical example, because we have the information up on this slide here. People can read that, but tell us a story. Like, what does that look like when someone gives us a call and says, yes, I want to get investment. Yes, I want to sell my company. Where does it go from there?
We'll have that initial call with them. It might be 2 or 3 calls to make sure that this is something that they really want to do. It's a little bit of a psych session when we try to really peel the onion a little bit on their goals and understand where they want to go. Do they want to leave the company? Do they want to stay with the company? Is there a certain price they have in mind? Is there a minimum price they have in mind? Are they looking to become part of a larger organization and want to spend the next 5 years growing their company within that organization? I mean, there's lots of different variables there. So we spent some time talking about that. And once we're aligned on that, you would sign an engagement agreement with whoever's going to help you, and then move forward into what we call the data collection phase. And during that phase, we basically collect financial history from you, a forecast, and we create a confidential information memorandum where we have a tremendous amount of initial information specific to you. And the difference between these 2 documents is that the first one is sent out without people signing an NDA, without people understanding who you are. There's no names. However, if they see the teaser and they're interested in learning more, we have them sign an NDA. And once they sign that NDA, we can share the confidential information memorandum with them. At that time is when they learn the name of the company. And we very often, if the interest is genuine, then we'll very often have an initial conversation between the 2 parties. And from there, we really see if there's a lock step in wanting to move forward. It's a quick process, many instances, but it does involve a lot of different companies depending on who we're going after and what your geographic area is, how big you are. Very different if you're a $1 million company, a $2 million company, or if you're a $10 or $20 million company. It's a little bit of a different process. At a high level, it sounds the same, but we do go through a little different process depending on how big you are, what we think your attractiveness is going to be, and what companies are going to be interested in you. Very important that, I'm sorry, go ahead, Renato.
I was going to add on this is that one of the elements, one of the things that you mentioned in our description that it's very important is the story, right? There is a story. You're not only selling a business, you're selling a story. And where I spend a lot of time in this process is essentially telling the story, how this new company, the acquired company with the company that is buying, are going to fit in the marketplace. What is their story? What are they going to sell? How they're going to position? How are they going to be stronger in the market? And another point in this story, which is quite interesting in the conversations with the owner that wants to sell the company, is that the owner is selling the past. The owner is selling what they accomplished, what they did to bring the company to where it is today. But the buyer is buying the future. The past is gone. The buyer is not going to have all the memories and all the experiences that you had in the past. They're going to build the new memories and new experiences. So there is a little bit of a disconnect. And a part of the process is like one of our clients told me that a part of the process is that we act a little bit almost like therapists in trying to work with the letting go part and understanding that the past is what brought you to the point that you're selling the company, but the client is buying your plans, your projections, your future, essentially.
He has to see your vision.
Yeah. Thank you, guys.
Yes,
He
and
has his
share.
own vision. He has his own vision, and we're looking to sync up those visions.
Exactly.
Exactly. And for those of you that are watching out there, I apologize. The stream, the software is not working very well today, so you keep jumping from event to event. Every time the stream gets interrupted, it creates a new LinkedIn event. So if you're joining us on LinkedIn, I apologize for the confusion there. But we're going to keep chugging along here and keep on moving here. Who do we target? How big of a deal is this? Trying to figure out who do we send? Well, you know what? Before we talk about that, let's get into this because Jo, you mentioned that during the initial phase, we gather a bunch of information, gather a bunch of documents, and we use those to put together 3 different documents that are going to be very important to the M&A process or the investment process, which is the teaser, the NDA, and
Right. Well, this data collection phase is really important, and it really creating those documents are important, and so the data collection side is very important. Can you hear me? Okay.
Yep, I can hear you.
Okay. So I can't stress enough that this data collection phase goes smoothly, that everything is shared. Sometimes it's very hard to get data, or maybe there's data that hasn't been created in years, but collecting this data is super important. We do create these 3 documents. It takes a few weeks to do that, but it's fairly straightforward. And people shouldn't be afraid of these documents. They're very common in the industry and where any companies are bought or sold. And buyers and sellers, or buyers are very used to these documents. They want to see them. So it's pretty important. We help with the creation of these documents. It's not something that the sellers need to do themselves. As consultants, we will take care of this phase of the process.
So let's start off with the teaser. What's the teaser? What do we use this one for?
As I said, the teaser is a blind document. It simply has a vision of the company. It's got a little bit of historicals. It's got financial history and hopefully a forecast at a very high level. It talks about all of these items that you mentioned. Some of these aren't as important as, just depends on how big you are and what really the story is. But it's a document designed to make you look good and to get people interested in hearing more about you. That's its real goal in life. That's why the word teaser fits perfectly.
Right. So we're sending that out to people, trying to generate interest. Then, if they do have interest, we send the non-disclosure agreement, which is
send a project-based non-disclosure agreement. If you don't have a mutual in place with us, and this is fairly straightforward. It protects the seller's information, and very common document.
And moving on to the big one that we want to talk about, the information memorandum.
The big one, yes. So the confidential information memorandum, this could be a document that could be anywhere from 10 to 50 pages. It has all the historicals in it. It's got customer information in it. It has everything, org charts, everything in great detail. This is where someone will really learn about your company. Again, it's things that I don't know about salary for owners, wives, and husbands, but we are careful with everything. Let's be careful here.
Right.
But it does have another level of information in it. And it's as we said before, everything is tailored to the individual situation. It's hard to just say everyone has the same information because it doesn't. We're very careful about, and I think it's what makes us better, is that it's almost a bespoke process for each company, and we're very careful to make sure that each one really represents the company well, represent the company properly, and it's the information that the owners and sellers want to share at this time, and that the buyers really need to see. And so,
I would add at this point, and I think that the comment about the husbands and wives salary there is the interesting thing, because most of these LSPs that we're dealing with the exception of the very big deals that we have been involved with, most of the LSPs in our industry are family-owned businesses, and you have, for tax purposes and because the way that business is designed, you have lots of personal expenses that go into your P&L, your business expenses. But when you're doing a transaction, when you're evaluating a company, you will take away those personal expenses that are not related to the day-to-day operations of the business to increase your profit and therefore increase your valuation. So these are expenses like your car, maybe, depending on the country, because different countries have different regulations of what you can expense, your vacation, your whatever that is. You're going to exclude those things from your financials to show what we call an adjusted EBITDA, an adjusted profit line, which is what is used as the basis for the calculation of the value of the company. So when you talk about valuation, you're talking about a multiplier of profit, a multiplier of EBITDA. And in order to increase that numerator, the EBITDA, you reduce expenses that are not directly related to the business.
You take out one-time expenses, you take out a lot of different things that won't go forward.
Right.
And this helps increase your value. We call that the adjusted EBITDA. That does get calculated over time, and it's a number that the buyers are very interested in.
One thing I've heard you guys ask is, we got our teaser, our NDA, our CIM, confidential information memorandum, and then it's time to start sending these out to people. So we start with the long list of potential investors or potential buyers, depending upon the situation. And here's where the process really starts to bifurcate, whether you are trying to sell or whether you're trying to get investment. One question that I've heard you ask before, Jo, which I always think is interesting, is there anybody out there that you refuse to sell to, that you just don't want to do business with? How important is that when deciding to sell your company or to get investment?
So I often like to tell people that buyers are very subjective people. Some people I use the car analogy. Some people, when they want to buy a car, they can go into a car dealership and drive out an hour later with a new car. Other people, it takes a year to buy a car. And buyers are just that way. They're very picky. Sometimes they're going to move very fast. Sometimes they're not. Matching sellers to buyers is a very important process. We do not take companies and send them out to hundreds of people and have auctions. That's not the way we work. We match the sellers and the buyers very carefully, and we spend a lot of time doing that. Buyers don't have time to waste looking at things they're not interested in, and sellers don't have time. We don't want sellers dreaming about getting sold to Lionbridge when Lionbridge isn't going to buy somebody that's doing $2 million a year.
Right.
So we need to manage that part of the process, and we do. We spend a lot of time matching them geographically, matching them vertically in a vertical industry. Are they a life sciences company? Are they a clinical research company? Are they marketing and software translation company? I mean, what is their specialty? That needs to be matched up, because people aren't going to buy things that aren't synergistic to where they're going. And so we spend a lot of time going through that process. We spend a lot of time matching, doing the matchmaking part of what being a broker is. And we're traditionally what we would call a M&A broker. And so we spend a lot of time in this area. We do have lists of sellers, different kinds of sellers, people looking for technology, people looking, PE firms looking for investments, first time, PE firms looking for add-ons to investments they've already made, companies wanting to grow. So we spend a lot of time doing that. And that's where our real value comes in, is finding that right buyer and matching them up. So we spend a lot of time here. This process is ongoing. It's very dynamic. And sometimes it can deliver something very quickly. Very often we'll find things very quickly. Sometimes we will go through a lot of people who do want to look, but might pass, and we'll spend time getting other people in line. The ability to make this part of the process work really well is that the data that we've gotten earlier is complete and it's very usable, and so that everything is kind of connected together.
So there's no back and forth. We want this process to run smoothly. So just a recap what we have on screen here. So we prepare that long list of potential investors or buyers. We reach out to them with the teaser. If they're interested, they sign an NDA. once that NDA is signed, then they can have access to the more confidential, the more robust that information memorandum, which is usually more like 20 to 50 pages instead of 1 or 2 pages, like the teaser is. And based upon that, they make a decision. Am I really interested in this company? Am I interested in going on to the next step, which takes us to the negotiations and due diligence phase, right?
Well, there's probably a phase in between there that I need to point
Uh-oh.
out.
Sorry, I
So
missed
if
that in the
they're
slide
very
deck.
interested, and very often they are, it's related to the negotiation phase, absolutely. But if they're interested, we make introductions, we start conversations. We hope there's many conversations. We'll host many, many calls to make sure that all the information is going back and forth. People are getting used to each other. In past years, people would make lots of trips and meet people. We're starting to see that start up again. We're starting to see buyers go out and meet their acquisition candidates. And so that's all really well and good. And in this phase, if there's synergy, we try to negotiate a price. And once that price is negotiated, we generate what's called an LOI, letter of intent. That letter of intent really solidifies the offer, both the price and the terms, any conditions that we know about. And it's a non-binding document that allows us to put a stake in the sand and see where everybody is. And so, yeah, you've got that here on the non-binding side.
Yep.
And that does involve a certain amount of due diligence. I just don't want people to think it's the complete due diligence process, because there's a certain amount of due diligence we'll absolutely do to get to an LOI. And then once the LOI is signed, now we move forward to closing the deal. And so there's a lot more due diligence after the LOI, which is what I just wanted to make sure we pointed out, that there's a little bit of due diligence prior to that in this phase, which is the LOI phase, I'll call it.
It's a letter of
Once we have
intent.
this nailed, we will move forward.
Yeah, because due diligence it's a lot. It's expensive. It's time consuming. Talk a little bit about that.
It is. Everyone wants to take apart the company. They want to make sure they understand what they're buying. If it's a stock sale or an asset sale, things will be a little bit different. And the contracts that need to be written with an understanding of what's involved, what the company really is bringing, what they're really buying. And so this due diligence phase happens there. It's also a phase where people go through the payrolls, they go through anything that's happened with the company. I mean, I can't make you a list of what they go through, because they go through everything. And everyone who looks is different.
Yeah.
And depending on the lawyers they're bringing to the table, the accountants are bringing to the table, the process that they've instilled from their investors, they will go through different phases. Some will want to talk to customers, some won't want to talk to customers. Some will want to talk to all the employees, some will only want to talk to the top 2 or 3 employees. Everybody's a little bit different, but we have to manage through this process. And this is part of the close process, because once the due diligence starts and once the buyers are convinced that they're getting what they think they're getting and they're ready to move forward, then the contracting phase starts. And the buyers normally write the contract to buy the company, and we do the back and forth and the due diligence and the negotiation around the contract. And once the contract is closed, we can set a close date and move forward from there.
Yeah, so let's go into that. So the contract signing, during the letter of intent or the non-binding offer period, there can be multiple people that are in the conversation that are interested in it.
Oh, absolutely.
Depending upon how it's structured, right? Depending upon the letter of intent. Some people ask for exclusivity, right?
Well, we normally see everyone asking for exclusivity.
Well, they all ask for it, yeah.
Yeah, well, and it's normal for us to agree to it. When we sign a letter of intent with one party, that is the party we will try to close with. That's
Right.
usually the time at which we'll close up negotiations with other companies. There certainly is a time frame involved, and if we exceed that time frame, or we feel that the closing's not going to happen, we might cancel the LOI and leave the first buyer and move on to another one. But we pretty stick to a good process, one that the buyers and the sellers like, and they like to know that things are concrete and moving towards success, and having exclusivity in an LOI is important to that.
So let's go into the contract signing and closing. How long does this take? What does this look like?
From the LOI signing to the contract signing can take from 60 to 120 days easily. It's a long process. It's where lawyers get involved. It's where accountants get involved. And you know, it's an important process, but it can take some time. And so the contract signing itself is pretty quick, but getting to the contract signing can take 90 days easily. And once we get there, we probably have 3 or 4 days between where the contract's finished and everybody gets everything ready for the closing, because there's often legal documents that have to be generated. Often there's tax documents that have to be generated. There's filings that have to be made at state agencies and stuff. So there's just a lot of things that have to happen right at the very end. So once we get to a certain point, all that kind of happens lockstep. The lawyers will take care of that, and there'll be a closing.
And I would add to this process that the seller is in control of the process, right? It's not uncommon for these processes to fall through, especially the first round of conversations and so on. Keep in mind that if you're selling to a fund, a private equity firm, and so on, these are professional buyers. These are people that buy companies every day. But the seller is probably a once-in-a-lifetime event. And this is where we as brokers come into place, because we've been in many of these deals, and we are providing you the support. But one of the things that I like to say to all the sellers is that you can change your mind up until the last minute. You're always in control of the process. It happens. It happens, and for different reasons, you can regret it. This process is very tiring, very time-consuming, but it gives you the opportunity to learn so much about your business, to learn about what are the important metrics for outsiders, things that you never thought of tracking in your company. One of the anecdotes and one of the things that has happened frequently to us is that the investor will come and ask, can you give me your average whatever or monthly rate of churn? And the owner doesn't even know what that is. And then they say, but I never measured it because it's not important to me, right? So you start looking at things that you were never paying attention to that might be valuable and might help to increase the value of your company if that number is positive. And then you can start, even if you don't do the deal, you keep tracking that thing moving forward, because it's going to be useful in the future for you.
Thank you, Renato. Well, that is our 5 phases that we've gone through today. Let's do a quick recap here of everything that we've gone over. Just really quickly, my takeaways that I wanted to, as I was preparing this Workshop Wednesday today, the takeaways that I'd like you guys to leave with today is, first and foremost, M&A is something that all LSP owners should at least have a basic awareness of, or a basic knowledge of. It's not something that you need to be scared of. Knowledge is power. And that's kind of why we wanted to do this today, just to give you a little taste of what that process looks like. It is a process. It's not this big, scary thing. It can be broken down into bite-sized chunks. So if you want more information about that, then reach out to us, and we're happy to talk to you. That's what we do. We talk to people every day about this. Secondly, you don't need to know exactly what your goals are when you get started. Are you looking to sell? Are you looking to get investment? What kind of exit strategy are you looking for? Are you looking to purchase another company and grow through acquisition yourself? You don't absolutely need to have a solid grasp of what your goals are before you start reaching out and getting more information. So with that, how can I get more information? Well, you can go to NIMSY Insights, and we have a services landing page all about mergers and acquisitions here. And if I can just bring it over here, and on this page, you're going to see a lot of the same stuff that we've talked about today. You're going to see the process, a quick overview of the process here. You're going to see some of the tombstones. That's what they're called. Thank you, Jo. They're called tombstones. When we close a deal, we create what's called a tombstone, which is just kind of commemorating the process of a successful merger, a successful acquisition, a successful sale. So you can see kind of some of the tombstones of deals that we've worked on here in the past at Nimsy Insights. And with that, Jo, Renato, any closing arguments here? Because I'm getting to the end of what I wanted to talk about today.
Yes, I would say that there is this thing that I tell when we do consulting and growth training with our clients on the LSP side. I frequently say that they have three things that they need to think about every morning when they wake up. I think you call them the founder's prayer or something like that. And those are things that you need to be constantly thinking about as you run your business. And essentially, your focus is always, you should be thinking, what will I do today to grow my business, either with sales, with investment in productivity gains and things like that. The second thing that you need to ask yourself is, what am I going to do today to buy another business? That's a way to grow your business. And finally, what will I do today to sell my business? You should be, as a chess player, you should be thinking constantly about what is your next move in any of these fields. You need to be prepared because opportunity knocks at the most unexpected moments. And if you're ready, you will benefit from that. If you're ready to sell, if you're ready to buy, if you're ready to grow, you're prepared to thrive in your business.
Thank you, Renato. I'll just quickly recap here my key takeaways from this entire workshop, live stream, whatever you want to call this today. Firstly, outside investors rely upon the help of industry experts like us, not to toot our own horn, but that's what we're doing here today. If you're from outside the industry and want to learn more about it, you would be well advised to reach out to somebody like Nimsy Insights. Doesn't necessarily have to be us, but talk to someone from within the language services industry, and they're going to help guide you through this process. Secondly, M&A is not just for exiting your business. It can also be a source of investment to fuel growth, either through acquiring another company or through obtaining outside investment to help finance the growth plans that you have in place. And lastly, this is a marathon. It's not a sprint. It can and does take months. We've seen it take over a year to complete. It is a lot of work, but with a little bit of knowledge and some help from the experts, it is not an insurmountable task. So it is within your reach. And with that, I want to thank you. We're not going to do questions today. I'm making a command decision because of the technical difficulties. For those of you that are still with us across 3 different disrupted live streams, I want to say thank you for sticking in it with us. Big thanks to Jo and Renato for coming on this live stream today to talk to us. We are all going to be next week at Localization World in San Jose, Santa Clara, wherever it is, somewhere down in California. So if you'd like to hear more, come by our booth, Nimsy Insights, and talk directly to the experts. So with that, I want to wish everybody a wonderful day. Check out the other workshops that we have available on Nimsy Learning if you're interested in learning more. And we'll see you there.
Thank you, Tucker.
Thank you.
Thank you, everybody.